Hey, my name's James Nicholson and welcome to my YouTube channel. We've had an update from the Bank of England this weekend about interest rates. What should we be expecting? When are they likely to drop? Because let's face it, that's ultimately what most of us that watch this channel want. And so we're going to cover all of that, what's going on. We're going to talk as well about what's going on in the USA and in Europe, because that's important. In fact, there's a phrase that's very common, is that the Bank of England follow the Fed. So whatever happens in America is likely that we would follow that at a later date. So we're going to jump into that and more in this video. While you're here, if you haven't done already, do subscribe over there and hit the bell notification. We've got more than 20,000 subscribers now. I want to hit 50,000 by the end of the year. That's my target for this year. And while you're here, smash the like button or tickle the like button. Do something over there to the like button. It won't harm you in any way, but it does get views on the channel. That's the only way, you pressing that YouTube knows to send this out to more people. So do that. Take 1 second. So, who's been talking this weekend? The Bank of England, a lot of their committee members go and do talks at big lunches, get paid tens of thousands of pounds. And Hugh Pill is one of these people, and he's been talking about inflation this weekend. He's been talking about interest rates, and it seems to be like they're singing from the same hymn sheet as the Europeans and the Americans. And what the ultimate message is, inflation is not beaten. Inflation is not yet under control. I actually like a website that I look at, I've mentioned this a few times, called Trueflation. Now, when you get the government number, that's the average for the year. What Trueflation does is it breaks it down and lets you see what's causing inflation today. So I've had a look on there this afternoon, and I've had a look at what's causing the UK inflation. And one of the biggest sectors that's causing a jump is alcohol and cigarettes. Now, why is that up? Well, that's actually up due to the fact that the government increased the tax on it. In fact, tomorrow we've got the budget, right? So the budget is tomorrow, as you probably know, and we'll be doing a video straight after that on the impact on property and housing. And so what's likely to happen is the cost of a pint will go up again. The cost of cigarettes will go up again. That's almost a given. Pretty much every budget they do that. It's an easy one for them to increase tax without much backlash from people, especially tobacco. And that's going to feed more into the inflation figures. One of the other things that is causing the inflation to stick around and go a little higher is oil prices. And they've gone up to around $80 a barrel. Now, that is not historically high, nowhere near that. It's been over 100 before, but it is an increase. And so when you're driving round, I've been saying for months, you're driving around, you're seeing the fuel costs go down and down and down. Now they're going up. For unleaded round where I live, it's 146. It was 139 only a few weeks ago. So that's been passed on to us already, and that's something we can't control. Now, my argument is that these costs, raising interest rates or keeping interest rates high, doesn't mean that we're going to buy less fuel. You buy the fuel that you need to get to your job. Yes, you might buy less cigarettes, you might buy less clothes, but those things are not impacted by inflation. In fact, a lot of things like that are going down in price at the moment, marginally. And so where we're really getting hit by inflation is food, energy, tobacco, and alcohol. Those things are really out of our control. Yes, we could smoke less. Yes, we could drink less, but we're not going to eat less, right? And so that's not really helping having these higher interest rates. Another portion that's hitting hard is the rental market. That's up 10% on an annual basis. And that's because higher interest rates have been pushed onto landlords. Landlords have then had to increase their rent. Insurance went up last year. That got pushed onto the rent as well. So all of this is kind of a mess, and it feels like the government isn't actually doing, or the Bank of England aren't doing the best job at getting this inflation under control. So who's got meetings coming up? First, we've got the ECB, the European Central Bank. They've got their meeting this week, and they're saying they're likely to hold. Their inflation is in a better position than the UK's. They've got quite a lot of core inflation's around 3%. Ours is over 4%. So that's a problem. They're saying it's lower. They're saying they're just not ready to drop yet. They don't need to drop yet. The Federal Reserve, which were being quite open about multiple drops this year, are saying they also don't need to drop yet. And so they've got their meeting on March the 20th. And it's not looking like the Federal Reserve is going to do anything there as well. So those two places are going to hold. The Bank of England, they're just going to copy, right? It's a nailed on conclusion that the Bank of England will leave the base rate at 5.25%. Nothing major is going to happen between now and their meeting this month. And so they're not going to move that in a downward trajectory. So what the markets are saying is they at one stage there was a potential of a March drop. Obviously, that's gone off everyone's radar now. A lot of people felt that the rates would drop in May, and that was due to the fact that inflation was dropping, and analysts were expecting in the UK in April, it could get to 2 point something. It might not be 2%, but we know it is going to move down temporarily. It's just now on the tail end, it's looking like it's going to go back up again. And so what the markets have now priced in is a June drop in rates. Now, the Bank of England are not going to say, yes, we're going to drop in June, because otherwise their rate that they've got today would not do anything. Hope that makes sense, right? So let's just say I'm buying a property at the moment in Dorking, and let's just say that we knew the interest rate was definitely going down in June. I would tell my solicitor to slow walk this deal, slow everything down, because if the rate drops in June, likely the mortgage rate would drop a smidge and I could move on to a better rate before I completed. I wouldn't look to rush that through. And that would hold up the whole market. That would be a nightmare for any sort of industry like estate agents, for builders that rely on work off the back of completion. So many industries rely on the property market to keep moving. What else is going on? Well, one thing that's going to make us a little richer is national insurance is going to get cut tomorrow by 2 pence on the pound. And they're saying that if you earn 25k a year, which is close to the annual average salary, that you will be better off by £250 per year. That's going to help with affordability on mortgages. Like, not a lot, but it is going to help. A lot of people had their mortgage go up on average 600 quid. So that's nearly half of that, which is good. Next, if you earn 50 grand, obviously you pay more national insurance, you're going to save more. So an average salary of 50 grand will save 750. That's going to help. Remember, we've got energy costs have gone down with the energy cap the other day. So energy costs are lower. They're likely to go up again, but they are lower for now. And the average mortgage increase for a residential mortgage was around 600 quid. So this will help a lot of people on that. So that's a good thing, and that will help. Who knows what else is going to be in the budget? There's been all sorts of talk. There was the 1% deposit, then that was like removed potentially. We've had stamp duty talks, lots of things. Maybe there'll be some surprises in there. Let me know what you think. And let me know, this is my question for you. When do you think interest rates are going to drop? Do comment below and let me know. Smash the like button so we get some more views on this. Do check out in the link description, I've got the fundamentals of property investing. That is more than 100 videos on how to source properties, how to get below market value deals, how to find investors, how to pick the right strategy to take yourself to the next level. And it's less than 50 quid one-off charge. So I'm going to link that below. Go and grab that today. Do check out all the other content on my channel, including this video right here.